Hello, and welcome to Smaulgld's. In case you missed it, top gold and silver stories from the week ended July 16th, 2016. This is a video companion to the blog post, which is linked to the bottom of this video. So please click on that link and you can follow along if it's hard to see on your screen. And if you're not a Smaulgld subscriber, please subscribe to the YouTube channel. And also, while you're visiting this link over at Smaulgld, remember to put your email address in right there, and I will send you this email every week as soon as it comes out, along with the podcast that accompanies it, as well as whatever Smaulgld posts we may post that week, although we don't post each and every one out by email because sometimes I send out 2 or 3 posts a day, so you would want to receive all those emails. Anyway, let's get right to the week in review. Top story of the week was the truck crash in Nice. Yes, I said that correctly. The truck crash. That's how MSNBC described the terrorist attack involving a large truck that killed over 84 people in the seaside town of Nice in southern France. Yes, they tried to make it sound like it was an accident. Young Mohammed Bouhoulet was out driving and accidentally ran into a few people, continued to drive accidentally. Then, as he's being shot at, accidentally jumps out of his car, grabs a few guns that he accidentally had left on his seat, starts firing them, and when he realizes he's about to get killed, he accidentally shouts Allah Akbar. That's what the MSNBC news account was, until basically all other news outlets kind of drowned that out and referred to it for what it was, which was an intentional act of terrorism. But there you see is a picture. Here's what it's. If you doubt what I'm saying, follow our live blog for the latest from the Nice after a truck crash leaves at least 70 dead. There you go. MSNBC reporting on the Nice truck crash. The other big news of the week was soon thereafter, there was an attempted military coup in Turkey. That's still developing, but it looks like it's been put down, and that the head of Turkey will use this to clamp down not just on the military, to purge just about anybody who's against him. So you either have military law in Turkey via the military, or you have some type of imposed martial law by the head of Turkey, Erdogan, whatever his name is. In any event, those were the two big stories outside of the economy, but of course they affect the economy and they add to the global economic uncertainty, as the Fed likes to refer to anything that happens outside of the United States. So you've got two major events last week. Let's get back to precious metals. Gold and silver. Gold closed last week at 1337. It was down 2% from the week before, when it closed at 1365, which I believe is the highest close of the year. So a slight pullback. Silver closed the week at $20.19, down about 6 cents from the week before. So it's basically even. But as a result of silver remaining flat and gold taking a bit of a dip, the gold-silver ratio has dropped down to 66.19. I got to fix that in the final version. 66.19 is a reduction from the high of about 2 months ago of 83, 84 to 1, but still off of the all-time lows, and also the historic ratio of silver to gold, the gold-silver ratio of about 16 to 1. And as Keith Neumeyer, the president and CEO of First Majestic Silver, says, that currently silver is being pulled out of the ground at a ratio of about just 9 to 1. So it's a very interesting dynamic where you have this still very high gold-silver ratio. Chart of the week. We had to pick Turkey. This is a chart of gold versus the Turkish lira prior to Friday's coup attempt. So you can see Turkish people who saved in gold would have preserved their wealth against the falling Turkish lira. It's an interesting chart. You can check that out. As we started the week, there was a story in CNBC saying that gold is unlimited upside because the Fed is confused on policy. Well, tell us something we don't know. Because the dollar does not have unlimited upside, because the Fed will always intervene to try to stop the dollar's rise. And of course, they always try to stop gold's rise by selling short contracts. But technically, as all nations begin to increase their stimulus. We'll get to Japan wants to increase their stimulus. Bernanke visited there and told them to do helicopter money. The Bank of England is looking at more stimulus. Possibly they didn't raise rates with lower rates, but they possibly could do that as well. So basically, and then if you have a confused Fed who says they're going to raise rates and never does raise rates, that kind of also harms the dollar. So all the fiat currencies can get harmed, and as this article points out, gold has unlimited upside. On July 10th, we published an article on gold ownership versus gold ETF shares and gave 3 reasons to consider not buying those gold or silver ETFs. So you can check out that blog post by clicking on the link below, finding this blog post, which is the, in case you missed it, blog post of July 16th, and then clicking on the link, physical gold ownership versus gold ETF shares, and you can check out those 3 reasons. There was another article on Indian temples urged to share their gold. As many of you are aware, India is in a war against gold, trying to take the gold, the wealth of the people, and monetize it, so to speak. There's about 20,000 tons of gold supposedly in the hands of Indian households, and India wants that gold. So they're offering them these gold bonds where the Indians are supposed to turn their gold in and get some kind of small amount of interest. I think to date they got 3 tons, so it's not really going very well, but there's a lot of media propaganda in India trying to convince people that they should turn their gold in. What do we got next? On July 11th, there was a story talking about gold sales in Bloomberg heading up 60% from May to June. Japanese are finally catching on to the idea that their government and Bank of Japan is out of control with the stimulus and the money printing, even though the Japanese yen has held up fairly well. And there was a quote from a Japanese gentleman saying he wants to buy gold every year as a birthday present for his daughter, and he's basically spending, the $1,400-$1,500 an ounce coin to purchase for his daughter every year, so she'll have something. On the silver, last year the silver mining production was up, despite what some commentators may have said. According to the Silver Institute, the CPM Group, the Mexican government, the Peruvian government, just about anybody who follows silver and tallies the totals showed that silver mining production was up in 2015. And it looked like at the beginning of 2016 that the projections were that silver mining production would be down. But it hasn't worked out that way. Endeavor Silver has just announced that they're going to be upping their silver production guidance. And First Majestic also, I think they had a 26% increase in silver mining production in the second quarter. So it looks like last year the silver miners when the price was low had to increase production just to stay solvent. And now it looks like as the price rises, they want to increase production. Now, they're still not keeping up with the demand, but that doesn't mean that silver mining production is down. That's a false meme that's been out there for quite some time, and I've heard many commentators repeat it, many industry leaders repeat it. They seem to have heard it somewhere. It gets stuck in their craw. It's absolutely false, at least according to all the official data. Silver mining production increased in 2015, and it may even increase in 2016 against the projections as the price rises higher and companies are trying to meet the demand. Fed chatter. This is probably the big story of the week economically. Last Friday, we had a, quote, good jobs report. And what I commented on at the time was they had to get that report. Because if they had 3 months in a row of bad job numbers and you had Brexit, there'd be absolutely no way the Fed could credibly say they were going to raise rates this year. But now they can start saying it's back on the table because now they have strong jobs and they can downplay Brexit. And they can say that the economy in the U.S. is kind of immune from Brexit and the job market is robust and solid. And then you get this Kansas City Fed President Esther George out there resuming her rate hike push because on the back of the strong jobs. And then a Wall Street Journal saying gold falls as economics concern ease. And here's what they say. Friday's strong job report sparked some speculation the Fed is more likely to raise interest rates this year. That's exactly the narrative that they want to push, is that the Fed is back on track. Rate hikes are on the table. And as I mentioned last week, they needed that good jobs report to stay relevant and keep this rate talk hope alive. And in fact, all last year, I said they would raise rates once. They did. And when they raised the rates, I said, They're not going to raise them again for a while. They're going to talk about it, not talk about it. And it looks like that's exactly what's happening. Rate hikes are still on the table, and they'll probably do one by the end of the year. Now, that's a far removed from saying they're going to raise rates and normalize interest rates. All they're doing is trying to stay credible, and all they're trying to do is keep the dollar from plummeting by being the one central bank that isn't on a mad max scenario to take their rates as far into negative territory as possible. They just want to be able to say our rates are positive because our economy is strong, robust, strengthening, and so on, and we're going to raise rates. So you got Esther Jaws out there from Kansas City Fed saying she wants to raise rates. Now here it is on Brexit. Here they're basically saying now, well, wait a minute, this Brexit vote was advisory. We'll have Parliament decide. And then Cameron, the Prime Minister of England, resigns, and he puts this Theresa May woman in, who supposedly is very bad on immigration, not the people, not the woman or the Prime Minister that the Brexit people probably wanted. Nigel Farage says she's the worst on immigration. And then you get the propaganda, The Guardian, saying that Brexit is shorthand for sorry, your country has failed. Now, that's complete nonsense. They made it sound like, people come to America and Americans are very sad and upset and they think that England has failed. Anyway, that's The Guardian for you. That's probably the equivalent of MSNBC over in England, only in written form. Euro banking, we had the EU talking heads out saying no problem, no acute crisis in Italy, bank bailout with investor losses, no big deal. And then we have Martin Armstrong saying bank runs have begun in Italy, ATMs being empty. Who do you want to believe? I don't know. They always say no problem, and then there's a big problem, then no one saw it coming. And the reason no one saw it coming is because for months and weeks they say there's no problem, which meant they didn't want to see it coming. And then when it came, they can claim, oh, it's unexpected. U.S. Mint sales update. U.S. Mint reported selling 175,000 American Silver Eagles. Not that much, because now you see, and Rory Hall and I from the Daily Coin had our bi-weekly call. It's actually a monthly call on the sovereign mints showing or discussing how low the American Silver Eagle sales are this month. As of, I think this is July 12th, there was only 425,000 American Silver Eagles sold. They've been selling 4 million a month from January through May, and in June they sold 2.8 million, and now all of a sudden in July they're down to 4.25, and that's a result of them front-end loading and overstocking their authorized purchasers. The only good news in that means you can get them for a lower premium. Look at this chart here. You can see they once were 50% premium when there was an actual shortage where the U.S. Mint ran out of blanks and could not produce Silver Eagles, and now they're very, very low. You can probably get at a good coin dealer something close to what an authorized purchase pays, just about $2 over spot. The gold's selling okay, nothing, no big deal. The Harper's Ferry coins, looks like they stopped at mintages, 34,200. Those are the 5-ounce America the Beautiful coins. It looked like at the beginning of the year they were going to start selling 100,000 each of those. They didn't. The next coin up is for you progressives is the Theodore Roosevelt coin, which should be out, I think, next month. I don't know what the mintage will be on that, but if the Harper's Ferry is any indication, it looks like they're back down to reducing these 5-ounce silver coins to about 40,000. As I mentioned, we had done a podcast with Rory. You can click on it here. You can go over to the Daily Coin YouTube and find it, discussing how the Silver Eagle sales plummet in the middle of a silver bull market. Interesting story. A Japanese company bought a Swiss gold refiner. We have continued Indian gold imports falling. That's due to the duties that they place on gold. Also, Indians are price sensitive. Price is higher, they're going to buy less, so there's also less demand. But of course, there's a lot of smuggling going on. Interesting to see U.S. news and talking about time to stash gold under your mattress. You are seeing in the mainstream media now a mix of coverage rather than just all negative coverage. You're seeing some good coverage with some criticism in them, but you're not seeing the all-out bashing of gold left, right, and center as you normally see in the mainstream media. Adidas sneakers made with real gold. You can check on that. You can see if somebody wants to spend a lot of money on sneakers, they've got a little gold in them. As I mentioned, silver, First Majestic silver production up 23% in the second quarter. Now, that's from last year's record production at silver First Majestic, who are a primary silver miner located in Mexico, which is the top silver mining country in the world. Their silver mining production was up in 2015, and largely on the strength of silver mining companies like First Majestic, the largest silver company in the world, Fresnillo, Great Panther, Endeavor, a lot of silver mining companies down in Mexico. Now we have the mantra again, no issues in Germany. German finance minister. No risk of Italian bank crisis. Okay. Bank of England hints at more stimulus. And then, of course, I mentioned that former Fed chair Ben Bernanke was out in Japan and urging them to use helicopter money. I guess Japan has to take the first step. They're the guinea pig. They do the stimulus. They do the negative interest rates. They do the helicopter money. And then the United States says, well, you did it wrong. Here's how you do it. And then we'll do it. And we'll do it even on a larger scale. U.S. economic data was not very good. It was okay. It was mixed during the week. But of course, the media is always saying it's solid, robust, sign of strengthening, and so on. Back to Fed chatter. One of my favorites, St. Louis Fed President James Bullard. He's now sticking to his single interest rate theory. He had been out saying that the Fed should do 2-3 interest rate hikes this year, and now he's saying they only need to do one over the next year or two. And he also mentioned a month ago, that the Fed was losing credibility by talking rate hikes and never doing them. So I guess he's trying to distance himself from the chatter when he's been one of the biggest blabbermouths about raise rates, don't raise rates, maybe we do QE. He's been all over the map, but now he's trying to regain his own credibility because he realized he's added to the entire Fed's lack of credibility by saying he's going to stick to this, we'll see how long, this single interest rate hike theory that he announced a week or two ago. Then you have Cleveland Fed president. She's calling for rate hikes. So you got this whole rate hike mantra started again. Fed presidents trotting out just like they did in May. But in May, people took him seriously. They all came out and they said, hey, you guys think we're not going to raise rates? Well, we're serious. It could come as early as June and then July. And bang, 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 rapid succession rate hikes. And then when the bad jobs report came out from May and June, it looked like rate hikes were off the table. Then you had Brexit and everybody started saying, okay, well, there's no reason to raise rates now. Brexit, now they're saying, is limited. And here's what you see now in the news. And these all come from our friends at Reuters. Yeah, this is the narrative. Brexit's going to cause a recession in the UK. And we warned you about that. And it'll cause a little bit of a slowdown in Europe, but won't have any impact on the United States. Now, we were told that Brexit would cause a global economic catastrophe. And now they're just going to limit their projections. It's going to be, well, it's really just the UK. They caused this, so they deserve whatever they get. And, unfortunately, there's some spillover in the UK. But the US, no big deal. Let's get on with the rate hike talk. More U.S. Mint sales reports. Again, not much. 120,000 this day. Brings them up to 545,000 for the month. The Gold Eagles, 13,500 month to date. That's pocket change for somebody, not me, but I mean, that's not a lot of silver or gold being sold at the U.S. Mint, despite the roaring sales price increases. And we mentioned in another podcast, this is all due to COMEX. That's what drives the market. If people are buying contracts there, people are also buying silver ETFs, gold ETFs. That's driving the price, not the physical coin sales at all. And also, I'll post something on this later this week, but India's silver demand is down from last year, but it's still fairly, quote, robust. And I think they did 290 million ounces of imports last year, and this year maybe they'll do 200, but still it's an enormous amount that they're taking up. We did a follow-on podcast, a little more in detail from the one that I did with Rory over at the Daily Coin. This one is on precious metal ETF and record COMEX open interest, drive gold and silver prices higher, as we were just discussing. This one has a lot more charts, and I kind of take everyone through the charts, so you could check that one out over at the YouTube channel, or just click on the link below and you can get to this particular blog post, which has the YouTube embedded right into the post. More Fed chatter. Dallas Fed president urges slow and gradual, careful approach to rate hikes, but still advocating them. Yakety yak. Philadelphia Fed President Harker, up to 2 rate hikes this year. So here it is, all this rate hike talk back in your face. Silver Institute issued a press release on the silver's price performance. Didn't say much, just basically noted that silver price is up dramatically this year. Then, of course, there's a negative story from Reuters. Silver jumps 50%, but beware the devil's metal. Gold, another negative story here. Sorry, gold and silver lovers, the party's almost over. Okay, it's been going on for 3 months, and now they're saying it's over. Post-Brexit, Bank of England eyes more QE. India finally cried uncle and reduced its excise tax on gold jewelry. That should probably help jewelry demand and gold demand in India a bit. But as I mentioned, higher gold prices curb Indian demand and, of course, imports. And if you want to read about the Indian gold monetization scheme, there's a link here where I describe what that entails and what the Indian government's trying to do. And here it says India nabs over 2 tons in scheme. Out of the 18,000, 20,000 tons, I would say the scheme is not much of a success. There's a story here on solar power driving prices higher. Bank of England surprised people. They did not lower rates as they might have many people expected, but they also are promising more stimulus. So maybe, they're I think at 0.5% interest rates. So going down to zero, I guess they want to do like the United States. They don't want to, especially when the pound is weak, they don't want to be lowering interest rates and weakening the pound more. So they'll probably just opt for more QE. Fed chatter again. Here's another one. Atlanta Fed president says patience required on rate hike. But, he says, I can still imagine a circumstance where at least one policy move, meaning a rate hike, could take place and possibly two. Of course, it'll depend on the economy. So there you got the same back and forth, back and forth. But before this jobs report last week, there was no back and forth. There is no rate hike coming. Now they're all throwing it on the table. And they don't just say maybe one. They maybe two. I mean, they've only got 3 more meetings, I think. Well, there's July and then the 2. Yeah, so they got 3 more meetings. But they're still trying to act like it's possible that they're going to accelerate the pace of rate hikes. Now, we'll see. U.S. economic data, you can check it out. PPI was up. Initial claims are down. But you get the propaganda. The industrial production was up month over month, but, down year over year. But the propaganda is, the U.S. jobless claim is unchanged as labor market picks up speed, pointing to a further momentum in the labor market. Momentum is the new word. They're not saying solid, robust, and strengthened anymore. Keep that word in mind, momentum. It's picking up speed. U.S. Mint sales update, again, not much to mention. So the end of the week, the end of the half of the month of July with only 695,000 American Silver Eagles, which means they're on pace to sell just 1 point historically it's a lot, but for this year it's nothing. 1.4 million American Silver Eagles might get sold at this pace in July. So Wall Street Journal also on industrial production said it was another sign that the economy was picking up, but Zero Hedge points out that the industrial production was a 10th month in a row where industrial production was down, and that's the longest ever, 10 months in a row, that it's happened outside of a recession. But that doesn't stop Reuters and the rest of the economic cheerleaders from saying there's signs. Remember the green shoots? So this is the kind of the signs of acceleration and a pickup in momentum. Hey, then, I hope you enjoyed this podcast. Please remember to subscribe to Smaulgld up at the top. You go to the link below this podcast, click on the link. He'll take you right to Smaulgld. You put your name, and not your name. You don't even need your name. I don't want to know your name. Just get your email address, and then you can get whatever I send out as soon as I send it out, as soon as it's published. And then also please subscribe to the YouTube channel. Thank you very much for listening, and have a good week.